So first quarter was a terrible first quarter for the US, but since around March we've seen much better data. We've seen better consumption data, we've seen stronger employment growth. All of these things together give us quite a lot of optimism that the US is set to grow around 3% going into the next few quarters and into next year. However, I do agree over a longer horizon the US is going to face significant challenges in making sure that long-term growth meets the potential it's had in the past decades or so. In particular, we know that demographics will slow labor force growth, and we know it's going to be challenging to meet the productivity gains that the US has seen in the past decades. So we think there does need to be a policy effort. We think that policy effort needs to be targeted at raising productivity. That could be through investments in research and development, investments in education, investments in job training and apprenticeships programs. We also see some scope for expanding the US labor force through bringing people into the labor force, for example, through childcare assistance for working mothers, but also through immigration reform that will help bring in skilled people back into the US labor force. US monetary policies provide a very supportive role so far in the recovery. The challenge ahead really is now to move from the very low interest rates we've seen over the past 5 years to a more normal setting of monetary policy, and to do so without creating financial market volatility, without impacting investment and consumption decisions, and to do so without having spillovers to the global environment, global economy as well. Now we think one aspect of this would really help is better communication, and we think there could be more frequent press conferences after each Federal Reserve meeting in order to provide an update on the Federal Reserve's current thinking. And we also see some scope in providing perhaps a quarterly monetary policy report that will provide a little bit more texture about how the FOMC, how the Federal Open Market Committee sees the evolution towards its goals of maximum employment and price stability. Well, certainly poverty is a macro-relevant policy issue for the US. 50 million Americans live in poverty. That's 1 in 6 out of the population, or 1 in 4 American children. And we think that while growth and better employment prospects will help lift a large portion of Americans out of poverty, we also think there is some scope for policy interventions as well. In particular, what we've advocated is an expansion of the Earned Income Tax Credit. That's a tax credit that's given to people below a certain income threshold in order to supplement their income. We think that would help in terms of addressing poverty. And we also think that would complement quite well with the rise in the minimum wage in order to make sure that hard work from most Americans pays off. When you look at the US federal, state and local government, the debt level now is around 105% of GDP. That's a relatively high level. More than that, by 2019, the debt level of the US government is going to start rising again as the US starts having to pay on some of its aging-related expenditures linked to healthcare and Social Security, and also as interest costs for the federal government start going up. So we think there does need to be an effort at addressing some of the fiscal imbalances. In particular, we've highlighted the need to address healthcare cost inflation. We need to address the imbalances in the Social Security system, and also to address the tax system, which is terribly complex and just doesn't generate the revenues that are needed to fund the federal and state government.